You ready, Steve? Uh-huh. Andy? Yeah! Bert? Well, all right, fellas. Well, let's go!
You're listening to CFRN, the Christian Financial Radio Network.
Good afternoon, traders, and welcome back to the CFRN Emini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things Emini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro. Joining us today, Mr. Michael Borg. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Hey, good afternoon. Welcome back. Today is Tuesday, 21st day of September, 2021. Thanks so much for joining us. Whoever you are, wherever you are, we're just glad to have you right here, right now. If you can't see the screen I have up, go to our homepage at cfrn.net. On the right-hand side of the page, click the big microphone, follow the instructions. You'll be registered in about 30 seconds, and that will give you one-click access to the show each and every day. It also gives you access to the chat box so that you can ask questions and participate in the discussion. On the days you're out of the office or away from your desktop, not to worry, just point any internet-connected browser to one of two places, cfrn.net/live. There you'll find a live real-time simulcast of the show as it unfolds. You just won't have access to the chat box. Okay, Valerie, I'll try it again. Valerie says it's still not showing the screen. On my end, it says it's showing the screen. How about now, Valerie? You see it now? You do. Okay, good. Alrighty. Also, we stream live each day during this broadcast on our YouTube channel, which is youtube.com/CFRN. youtube.com/CFRN. Not only do we stream live on YouTube each day, but we archive every afternoon broadcast. We currently have over 1,800 daily live broadcasts archived for your educational and viewing pleasure. And so with that, let's open with a word of prayer. Heavenly Father, we come before you in prayer to magnify and glorify you, to give you all the praise, honor, and glory that you deserve. Today we come before you humbly requesting your overflow blessings upon our lives, each and every person. We also take this opportunity to thank you for those blessings, the ones you have bestowed on us that we sometimes take for granted, and the numerous ones that are still on the way. Scripture tells us in Matthew 6 that if we seek first your kingdom and your righteousness, that all things will be added. Therefore, do not worry about tomorrow, for tomorrow will worry about itself. And each day has enough of its own trouble. And in 2 Corinthians 9:6, your word says, "But this I say, he who sows sparingly shall reap sparingly, and he who sows bountifully shall reap bountifully." So, Heavenly Father, as we thank you today for your blessings, for your mercy, and for your grace, we pray that you would bless us with love, joy, peace, and happiness. We ask that you bless us spiritually, financially, and also with good health. Keep us safe. Those among us who lack wisdom, bless with knowledge. Those who are weak, bless with strength. Shower with energy those who are weary. Those who are blind, bless them with sight. And those who are burdened, we ask that you set them completely free. And Father, we ask that you would shower these blessings on our family and friends as well. Help us all to remember that we are blessed, not just to be blessed, but to be a blessing to others. Help us to help others even when we're struggling with our own difficulties. God, only you know the desires of our heart, and you also know what we deserve. Bless us with what you know is truly best for us. Thank you for all you have done, and we declare that your overflow blessings will rain down upon us today. And in Jesus' name we pray. Amen. Amen. All right, happy Tuesday. Hope it's a happy Tuesday for you, whoever you are and wherever you are. Let's start with the cash markets here in the U.S., the indices as they're called. The Dow is currently up 220 points. I guess this is what they call a turnaround Tuesday, or is it a dead cat bounce? We'll talk about that later in the show. The NASDAQ is up 117 points. S&P 500 is up 25. The Russell 2000 up 7. In the commodity basket, crude oil is up 24 cents, trading $70.53 last. Gold is up $14.70, trading $17.7870 last. Now that's a gain of almost 1% for gold. Silver up 42 cents, trading $22.62 last, gain of almost 2%. In the Asian markets at the close, Nikkei posted a loss of 660 points, over 2%. Shanghai added just 6 points. The Hang Seng rose 122. And in the European markets at the close, FTSE up 77, a little over 1%. The DAX rose 216, 1.5%. And the CAC rose 96 points, also a gain of 1.5%. That gives us a mixed day in Asia, just due to the Nikkei. It was a green day in the UK, and so far it is a big green radio Tuesday here in the US of A. The only red on the screen as we look at the global markets would be the Nikkei, which again posted a loss of 660 points, a little over 2%. Everything else is in the green. So with that, we'll go to Michael, get a recap of what happened this morning in the live training room. After that, I'll come back. We'll take a look at the Logic 247 alerts, the concierge trade alerts, and at any time during this broadcast, feel free to type any question you have into the chat box, and we'll be happy to answer it for you. Michael, I can see your charts.
Great.
So it's all yours. Take it away.
All right, here we go. All right. Good afternoon, everyone. Today is Tuesday, the 21st day of September, 2021. All right, so if you have not taken a free trial with us and you want to take a free trial with us, go to the homepage, eminitrainingschool.com. On this page, all that we ask for is your first name, your email, and your phone number. You can tell us the biggest trading challenge so we can tailor one-on-one training just for you. Hit the send button, you'll be sent a confirmation link. You must click on that confirmation link, okay? If you don't click the link, you don't get a free trial. So you have to click on that link, all right? All right, spreadsheet. Now, if you're going to read the spreadsheet, you got to read all the CFTC risk disclosures down at the bottom. Today, as I said, is the 21st day of September, 2021. We made 10 ticks in crude, 18 ticks in gold, and 18 ticks on the ES. Put us at plus 505 on the morning session. Today it took 10 minutes and 2 trades to get to the goal for the day. At that point, we're up 112.50, and we took a total of 31 trades this morning. So we had a bunch of trades this morning, almost all month, I think. Yeah. Out of those 31 trades, 10 of them were break even. I think 4 of them stopped out, 10 of them were break even, and the rest all made something. There weren't a lot of big trades today, though. I mean, big trades being 10 ticks or so. There weren't a lot of those today. There were 8 tick trades, but a lot of small trades, it seemed like. I'll get into all that in just a minute. But that puts us at $7,227 on the month. That's over 14 trading days, averaging $516 per contract per 2-hour trading day. On the year, we've gotten our goal in 179 out of 182 days, and that puts us at $107,230 per contract per 2-hour trading day. Now, that's over 182 days on the year, averaging $589 per contract per 2-hour trading day. Now, again, we'll go to this. Following the 24/20 blueprint, sort of, if you were to add 1 contract per month instead of 1 contract per every $2,000 made, the latter part would put this number much higher. But if you were to add 1 contract per month, you'd be at 9 contracts right now. And if you quit when you got the goal for the day, you so far this year would have worked a total of 50.95 hours, and your average hourly rate on the year so far would be $3,072 for those 50 hours. Okay. All right, let's get into the trades. Okay. Now I'll start out with gold. Gold had the fewest trades today. Let's see, we'll go all the way back to the beginning. Now there was a bounce off the BBC right here that I missed out on. Too bad. It turned out to be a really nice trade. There was a little bit of a follow-up right here that I also missed. Now gold was doing pretty well getting to the numbers that I thought it was going to get to today. You see all the lines that I was drawing? It was hitting those lines pretty well. This one it didn't get all the way up to, but this one it did. This one it didn't. This one it got within a tick, and then eventually it got to it. But there was a short here that I missed, then a break even there. And on this one on gold, we picked up 4 ticks right there. The next one over here, we picked up 8 ticks. Now you see I had drawn these lines in here for it to get to that one. It got 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 to this one in here. This one came within a tick. But we picked up 8 ticks on this one here, getting us to plus 12, and then 6 ticks on the next one, getting us to plus 18. We missed a trade right there, and then during the break, it looks like there was a short in here, 1 short in there, then a momentum short there, and another momentum short there during the break. So the gold was pretty good to trade today. It was pretty slow, and it was hitting the numbers pretty well. Crude oil was also hitting some numbers pretty good, but we were back and forth on crude. We started out with a stop out right here, minus 8 ticks. Then on this one, we picked up 4 ticks to get us to minus 4. Then we picked up 10 ticks. That was our biggest trade of the day right there, I think, to get us to plus 6. Then I stopped out again to get me back down to minus 2. Right, then I picked up 3 ticks to get me to plus 1. I had a break even. Then, let's see, there was a short off the BBC right here that I missed. And I see it was getting to its numbers too, but I had to get filled to get to the numbers. Or even if there was no trade setup, I was still putting out the numbers and it was going there pretty well. It looks like right here we picked up a couple of ticks to get us to plus. Wait a second. Back here, we went from, okay, I forgot to put something in here. See, we went from minus 4 to plus 6. That was plus 10 right there. Then we stopped out, put us at minus 2. Then we had 3, that put us to plus 1. Then missed that trade, picked up 1 here to put us to plus 2. Then 6 there to put us to plus 8. Then 2 there to put us to plus 10. Okay, that's right. And then right here we had a break even. Now there was a nice move up right here, but that was after the session this morning, and it didn't give us a trade setup to get there to begin with. it was really choppy after that. So really no trading in here during the break. Okay. And that was gold today. I'm crude, sorry. The ES was pretty active, but you see the ES, the thing with the ES this morning, I'm gonna look at it on a couple of different time frames here. Now last night, I was looking at it here during this candle building right here. And this is when I said something to Dwayne, or I typed something into the Telegram channel anyway, about it'd be interesting to see if 4,400 holds. I typed that in last night and it got up pretty close to it. It was down here when that was happening. And I was looking at the BBC here on the 4-hour chart. And it got all the way up here to 95.5, I believe, pretty close to 4,400 in that context. And then this candle was building this morning and it was looking like it was definitely going to close down, 1 hour into the morning session. And then it tried to close up when it was getting up here toward the close of that candle. It looked like it was trying to close up and then it just slammed right back down. I was hoping it was going to close down below this level right here. That would have been really bearish, but it closed inside that candle. And that makes this kind of a bullish candle right here. When this one closes, we'll see what it looks like when it actually closes. But if it closes up like it looks like it's going to, then that's going to be a bullish candle. But you see it did draw all the way down here. And anyway, then we get into the individual things here. Now, we were trading between zones here this morning a lot, but the zones are 20 points apart. So if you look at this right here, see, we were trading in between these two zones right here this morning, and the zones are 20 points apart. So when it was approaching this zone right in here, I was hesitant to trade anymore, well, right through this area right here, because we were in between these zones and it was whipping around quite a bit. But let's get into what we did actually do. Now, this is, again, one of the cases where I just say trade what's in front of you. Now, our first trade was we missed a trade right here, right at the very open. We missed a trade there and a trade there. Oh, one there, and one there, right at the very open. And then we picked up a break even right there. Then this trade here on the ES, we picked up 4 ticks. And right here, we picked up another 5. That put us at +9. I got to fix that in the spreadsheet. That should be 3 trades it took today. Then we picked up a trade right here. We picked up 5. That put us at +9. There was a bounce off the BBC right here. Now, again, this comes into that decision-making stuff where you don't know if you're in a trend or not. I mean, it looks kind of trendish right here. I don't know why I didn't take that bounce off the BBC, but down here, everything was suggesting we should have. But anyway, I took this one here. We ended up with 5 ticks on that, putting us at +9. That's where we got the goal for the day right there. I missed this trade, but I picked up the next one. We got 8 ticks on that, putting us at +17. And then I had a break even and another break even. I missed a short right in there. Then we went from +17. We picked up 9 ticks here to put us at +26. Then I stopped out to put us back down to 18. Now 18 became a popular number today with the ES. I stopped out there to put us back down to 18. Uh-oh. It looks like I missed one here. Oh, I think I did it backwards. Okay. Then I stopped out again, and that would have put us down to 10. And then I had a +8 right there to put us back to +18. That's what. So it ending up in the same place. We ended up at +18 after that stop out and that +8. And then we stopped out again. Let's see. Where were we? Okay, we stopped out again, and then we had a break even, and then we picked up, what did we pick up on this one? We went from 18 to 22. I'm trying to get it all in here because there's some stuff that happened in here that I thought I had it all down. But we stopped out again, then we had a break even. Here, this is what I have down. We went from 4 to 9 to 17 to 26, stopped out down to 18, back up to 26, back down to 18, back to 22, then to 26, then back to 18. Now, there were a whole bunch of break-even trades and all that, but I'll show it to you. We took this long right here, and we picked up something on that. It was the up close right here on the trend line Now, if you look at this, the cycle was blue. You had good separation. The MA1 stayed blue and straight up on that whole pullback right there. That's a very high probability trade. There's another one right here. There are a couple of them. And that happened again and again today. This one right here, highest probability trade, bounced off the BBC that I missed. This one right here, another one of those MA1 trades where the MA1 never flinched on the pullback. Right here again. I made this big move down right through here. And there were a couple of trade setups on this because we had broken dynamic support back here. And it really didn't give you all that much on the way down. Then it gave another one right here. No, I don't think I was sitting at my desk when this happened. Broke dynamic support again, and it looks like, yeah, it really didn't give you all that much through there. Then it turned around, started moving up. We ended up with a break even there. It looks like another stop out right there. And I guess the last trade we had was a stop out. We went from 26 down to 18. Now during the break, right in here, looks like there was a long opportunity from right here to grab that leg up. And then it got all sideways right here at this weekly trading zone. And did it give anything in here? Would it draw on the trend line like that? No, nothing there. Would have been a break-even trade right there. And that was it. It really didn't give a lot during the break. Yeah, there was a lot of opportunity this morning, hence all the trades. But I got to change one thing in this. One thing in the spreadsheet. This number right here was a 3. It doesn't change any of the other numbers, but down at the bottom, down here, what these numbers will change, commissions, and down here, this number will change by 1. But if you're going to read the spreadsheet, you got to read all the CFTC risk disclosures down at the bottom. Today's the 21st day of September 2021. Today, we made 10 ticks in crude, 18 ticks in gold, and 18 ticks on the ES. Put us at plus 505 on the morning session. Today, it took 10 minutes and 3 trades to get to the goal for the day. At that point, we're up $112.50, and we took a total of 31 trades. On the month now, we're at 7,227. That's over 14 trading days, averaging $516 per contract per 2-hour trading day. On the year, we've gotten our goal for the day on 179 out of 182 possible days. Okay. And that's put us at $107,230 per contract per 2-hour trading day. It's over 182 days, averaging $589 per contract. Now again, down here, if you did everything exactly like I did, and you were to stop and add 1 contract per month, stop when you got your goal for the day and add 1 contract per month, you'd have traded a total of 50.95 hours, almost 51 hours so far this year, made 570 trades, and averaged $3,072 per hour during those 50 hours. Okay, that's the way it worked out over the year. Now it didn't start out at $3,000 per hour. Probably started out at 100 or something like that. Actually, no, because in the beginning, it's 3,400 in the first month, 297 minutes. So we'll just call it, 4 hours. No, well, 5 hours. So it would have been about, I don't know, almost $700 an hour after the first month. That's how it started out. Anyway, the spreadsheet does the math for me. If you haven't taken the trial with us and you want to take the trial, go to this page here, eminitrainingschool.com. On this page, all that we ask for is your name, your email, and your phone number. You can tell us the biggest trading challenge so we can tailor one-on-one training just for you. Hit the send button and you'll be sent a confirmation link. You must click on the confirmation link, okay? If you don't click the confirmation link, well, we don't know that you took the free trial, so you got to make sure you go and click on that link, okay? All right, that's it, guys. With that, we can pass it back out to Studio A, fabulous Phoenix, Arizona, overlooking the South Mountain, America's largest city park. Dwayne is ready.
Yes, sir. I am ready. Recap of the recap.
All right. Today it took actually 10 minutes and 3 trades to get to $112.50.
Good job. Excellent.
Thank you.
As always. Now, guys, at the top of the show, I mentioned a term some of you may or may not be familiar with, the dead cat bounce. Now,
I was exactly thinking of those terms last night.
I know Michael knows exactly what a dead cat bounce is. Now, I'm going to give those of you who don't know a basic definition. A dead cat bounce is a price pattern used by technical analysts. It's considered a continuation pattern where at first the bounce may appear to be a reversal of the prevailing trend, but is quickly followed by a continuation of the downward price move. It becomes a dead cat bounce and not a reversal after the price drops below its prior low. Now, here's the thing. A dead cat bounce can really only be identified after the fact. That's why you don't hear us using that term a lot here on the show. It's kind of like getting out of the market at the exact swing high or the exact swing low. Pretty hard to do, except by accident, because nobody, not man nor machine, knows it's the swing high or swing low until after the fact. A dead cat bounce is a temporary, short-lived recovery of asset prices from a prolonged decline or a bear market that is followed by a continuation of the downtrend. Frequently, downtrends are interrupted by brief periods of recovery or small rallies during which prices do temporarily rise. It also has another name. It's called the sucker's rally. So we always want to be very, very careful with that. Now, I drew in yesterday all these different windows of opportunity, and we closed this window, and then immediately we bounced. Here's the thing. We haven't bounced back to that 62% fib retracement yet. That's where we have red and falling. We've got a bearish cross on the daily chart. We've had very few bearish crosses on the daily chart this year. In fact, now we've had price, as you can see, we've had price spike below the BBC, but an actual bearish cross on the daily, okay, there's one. We had to go all the way back to May to find the first one, and I have no idea how far we would have to go back. Well, we're already back to December of last year, and we don't have one. Think about that. An entire year, 2 bearish crosses. Highly unusual market behavior. But we do have the bearish cross. And so for us to consider this to be anything more than just a rally and a downtrend, we would need to see price overcome the step line, overcome red and falling. Most important, price would have to get back above the BBC, and yes, we need to see a bullish cross. That confirms for us that it's more than a dead cat bounce, and that price would in this case then be headed to take out the all-time historic intraday and closing highs. Okay, so that's a short little lesson in an odd term, dead cat bounce. And the reason they call it a dead cat bounce is the notion that even a dead cat will bounce if it falls far enough and fast enough. And yesterday was definitely a fast and furious day. The bounce that we got, the low yesterday, took us down to, come on, pop up. Okay, try it again. The low yesterday, 42.93.75. Down here, 42.93.75. And from 42.93, we bounced up to 43.93. So is that a 100-point bounce? Let's see the high, 43.95. 43.95 to 42.95. Yeah, that would be 100. So we got a 100-point bounce. I mean, that's huge, right? Does it stick? In fact, does it make it to red and falling? Is it able to overcome it when it gets there? I mean, there are a lot of obstacles. First price would have to overcome. We've got resistance times 3 here on the daily chart. We've got red and falling. We got the step line. We got the 62% fib. The price could overcome those 3 things. Then it's got to deal with the 50% fib retracement. Now, on these retracements, remember, as price is coming down, we expect those areas to be support. We had a very nice bounce on the 24% fib, very nice bounce on the 38, several bounces on the 50. We had a little bounce on the 62, which was kind of a heads up, was when that 62 broke, whammo, okay? But when price starts to move back up in the opposite direction, now we can do one of 2 things. We can do both things. We can look at these as potential areas of resistance. They will be. We can also draw our fibs differently. These fibs are drawn from the low to the high. We can also draw fibs in the opposite direction. And I'll show you what I mean. Let's take our fib retracement tool and we can draw reverse fibs. So from the all-time historic high down to the swing low of the sell-off yesterday. And remember, fibs are an area, so don't obsess about getting it exactly perfect. Now, drawing reverse fibs, we can see that from the low, from the high to the low, we bounced not only to the 24, we bounced to the 38. Here we have the 50. Here we have the 62% fib lining right up with the BBC. And for us to call this anything other than simply a bull leg in a downtrend, we've got to see price get above the BBC. I want to see price close above the BBC, and then I want to see a daily candle open above the BBC, and then I'd like to see it close above the BBC. That's true confirmation. By then you probably have your bullish cross, and we're off to the races to try and take out the all-time historic intraday high. So the bounce was impressive, but as you can see, we're well off the highs of the session. If by the close today we trade below the low of the session, which currently is 43, pop up, 43.36.5. If we trade below that price, actually if we trade below the opening price of this candle, well, no pop-ups. The candle opened at 42.5. So if we trade below the 43, 42.5, this will go from being a green candle to a red candle. If we close with a red daily candle, then there's an extremely high probability we're going to go back to test this swing low. Okay. Now, if we take out that swing low, we have this window of opportunity here, and we have potential support coming off this area right here. If we can get through that area, and we have, I believe yesterday we figured it out, this is a 30-point window of opportunity, this is a 20-point window of opportunity. Now, I'm going to, as you guys know, I don't use a lot of sports analogies. I'm not an athlete, but I blunder my way through them from time to time. I'm also not a hunter, so why not use a hunting analogy, okay? I want to help you understand that everything we do operates under the same basic principles, Okay. What Michael does in the live training room, Michael and Val, and then what we do with the alerts, it is all under the hood. It's the same thing. To the naked eye, it looks completely different, but I assure you, it is based on the same underlying principles. Now, what Michael and Valerie are teaching in the morning in the live training room are the rules of engagement. Okay? If you were a hunter, that would mean how to load your gun, how to aim, how to zero in, with your scope, how to execute, and then, yeah, unless you brought servants, you got to go field dress the animal. That's just exiting the trade. Rules of engagement. Now, let's say you got some money and you book yourself a hunting trip, you and a buddy. You want to go hunt in the Alaskan outback. I don't know what you hunt there, elk or moose or bear, I don't know. Whatever it is you want to shoot. So I pick you up in my little seaplane, those little planes that float on the water and land on the water and take off on one of those. So I pick you up and we fly over this beautiful sweeping vista. Tens of thousands of acres of green trees as far as the eye can see. And whatever animal it is you're hunting, they're known to frequent that area. But it's a huge area. Now, how would you know where to even start to try to find this animal that you've set out to execute or shoot or hunt, whatever the term is, right? Well, that's where a scout or a guide comes in. So as I'm flying the seaplane, just over the tops of the trees at this point, I hand you a map. There's a little area circled on that map. And I say, okay, we're right above this area right now. And you say, okay. And I tell you, that's where you're going to find herds of deer or moose or elk or bear or whatever it is people hunt there. Now, I can't put you down right here because that would, of course, cause all the animals to scatter. So we're going to go about 2 miles east or north or south. I've got a little landing strip. I'm going to put you down there. Then you're going to use this map to walk this trail to get into this fertile hunting ground. We know that these particular animals come here to eat and to drink and to procreate, etc. So what I've done as a hunting guide is I've shown you this huge area teeming with wildlife, but I've isolated the specific area where you're most likely to find the animal it is that you're hunting. Fertile hunting ground. And so I put you down, you get all your gear, you got your map, you follow the trail. Sure enough, right where it's marked on the map, there's a deer stand up in a tree, the one the guy told you about. So you climb up in it and you hunker down and you wait, because you know that's fertile hunting ground. You're just waiting for some innocent animal to wander into the clearing so you can take your trophy back home. Okay? The alerts do the job of the hunting guide. They show you ahead of time the area where you're most likely to find a high probability, low risk trading opportunity. And as you sit in that deer blind and you're quiet and you wait patiently, and as that animal wanders into the clearing in front of you, this is where you now use the rules of engagement that you have learned in the live training room day after day after day. you've watched Michael and or Valerie execute trades over and over and over and over. They never change the rules. They never change the indicators. There is a rule for everything in the live training room. All you have to do is learn the methodology, learn the strategy, be patient, and when it's time to pull the trigger, you don't hesitate. Your hands aren't shaking. You just squeeze the mouse. Mark Douglas taught all of us, that trading perfection is simply this: knowing what to do, when to do it, and then just doing it. That is trading perfection. And that is a crazy, wild hunting analogy about trading. But I hope it will somehow stick with you so that you're able to understand how what happens in the room and what happens with the alerts, be they the logic alerts or the concierge trade alerts. I hope it helps you see a little more clearly how the two work hand in hand. All right, got a couple of headlines. Amazon's AI-powered cameras reportedly punish drivers when other cars cut them off. We'll go to the charts here in a few minutes and look at all the alerts. Delivery drivers, now, I don't know about your street, but where I live, one of those Amazon vans seems like almost every time I look out the window, there's one going by, headed somewhere. Delivery drivers face punishment for using side mirrors, which can hurt their chances of earning more money. And, true story, those drivers, they're in it for the money. Aren't we all when we go to work? Amazon drivers say they are being punished for driving habits that are considered safe and others that are beyond their control. Drivers told Motherboard, which is a magazine website, that the AI-powered cameras in Amazon's delivery vans penalize them for such things as looking at their side mirror. I thought that was a good thing. Adjusting the radio, maybe not when driving, and even getting cut off in traffic by someone else. If someone else cuts you off, you get penalized. A Los Angeles delivery driver told Motherboard, "It's upsetting when I didn't do anything. Every time I need to make a right-hand turn, it inevitably happens. A car cuts me off to move into my lane, and the camera in this really dystopian, dark, robotic voice shouts at me." Amazon says it has seen a reduction in accidents and other safety violations since installing the Netrodyne cameras in its delivery vehicles. When the cameras spot possible unsafe driving events, these instances factor into workers' performance scores and can in turn hurt their chances of getting bonuses, extra pay, and prizes. They can also affect the income of the Amazon delivery service partner itself. See, all these little vans, they're not all owned by Amazon. It says that on the side, but Amazon had a program a few years back. If you wanted to do a startup, they would fund you to go out and buy 10 or 20 or however big you wanted your business. They would buy these vans, a specific van. You would really be in charge of going out and negotiating everything. But Amazon used their credit to buy these vans, to get them painted, to get them customized, to do the job. And then you hired a delivery workforce, and your job now is to manage your delivery team. So when this article talks about the Amazon delivery service partner, see how it's interesting how Amazon isolates different departments, insulates themselves against, because you see if something bad happens in one of those vans, who's going to have to go to court? Who's going to have to deal with the insurance company? Not Amazon. No, you, the delivery service partner. But I digress. Now, these events help decide whether Amazon drivers are given ratings of poor, fair, good, or fantastic. Amazon delivery service providers, which employ and manage the drivers, can get bonuses to put towards repairs, damages, and other things only if their drivers' combined weekly scores land in what's considered fantastic territory. Amazon uses these cameras allegedly to make sure they have a safer driving workforce, but they're actually using them not to pay delivery companies. One of the safety improvements we've made this year is rolling out industry-leading telematics and camera-based safety technology across our delivery fleet. This technology provides drivers real-time alerts to help them stay safe when they are on the road. Well, a lot of the owners of these small companies, they're not impressed. They're not happy, and it's taking food off their table. It's taking cheese off their macaroni. Tesla is under investigation for a fatal Florida crash. Uber employees are wondering why their company is now worth less than DoorDash. Remember we talked the other day about the new promotion DoorDash has where you could get unlimited deliveries for $10 a month? That's hard to compete with. Twitter is going to pay an $809 million fee to settle a class action suit about user engagement. The lawsuit alleged Twitter misled investors about the level of engagement by users on the social media platform. That's a big check. They probably use one of those big cartoon checks. $809 million. A spat with the SEC has led Coinbase to abandon its plans for a crypto lending program. As SEC Chief Gary Gensler hardens his stance on digital asset regulations, Lend will not be a part of Coinbase's plan for the future. Apple released it just after I updated, spent an hour updating my phone to iOS 14 point something. Well, yesterday, here comes iOS 15. And that takes a good hour to upgrade. There are 19 things that you can now do with your phone that you could not do yesterday. The list is so extensive, rather than read it here on the air, I have posted the link to the article in the Breeze channel on Telegram. So just go to the Breeze. Now that's a public channel that we have on Telegram. If you don't know how to access it, or you need to access it, or want to access it, call Valerie at 949-42-EMINI, or just send an email to support@cfrn.net and just say, I would like to have access to the public channels, please. And she'll be happy to get you all squared away. One of the biggest, I'll just go over one of the new features. One of the biggest new features in iOS is called Focus, which you can find in the main settings menu. It's like Do Not Disturb, but you can set up multiple scenarios like home, work, or vacation, and set custom notification rules for each one. There's also the option to let other people know you've got notifications turned off when they try to text you. This way they know that you're not just shining them on, you're not ignoring them, but that you actually are not returning messages at this time because you're sleeping or in a meeting or whatever it might be. So again, there's 19 major things Gizmodo found to put into this article. The software was just rolled out yesterday. If you want to wait a few days before upgrading so they can find the bugs, you might consider doing that. I just went ahead and did it, and I don't normally do that. And Shopify just beat out Amazon in the latest competition between the e-commerce giants. I did not see this coming. Shopify sites drew more online traffic than Amazon for the first time last quarter, reflecting the former's rapidly growing reach across the digital shopping landscape. That's a big deal. Now, yesterday in the markets, U.S. stocks fell sharply. It was the worst day in the markets for months. S&P 500 fell by 1.7%, its biggest drop since May. At one point, the benchmark index was down by 2.9%. The Dow Jones Industrial Average closed down by 1.8%. The tech-heavy NASDAQ fell 2.2%. These losses came after Hong Kong's main index plunged on concerns about weakness among property stocks. U.S. investors also are increasingly worried about signs of economic damage from the Delta variant fueled surge in coronavirus infections and hospitalizations. What happened here is that the list of risks has finally become too big to ignore. And that's from Michael Arone, Chief Investment Strategist at Michael's old job, State Street Global Advisors. Now, I posted something last night also in the Breeze channel. Let me scroll up real quick. A lot of traffic in the Breeze channel. If you're not tuned into that, you should check it out. Okay, this is what I posted last night. Evergrande Group, probably a company you never heard of. It's a real estate company. The Evergrande Group of the Evergrande Real Estate Group in China is China's second largest property developer by sales and the 122nd largest group in the world by revenue, according to the 2021 Fortune Global 500 list. Now, this is a stock trading at 33 cents. Now, I wrote this last night. Today's meltdown had a lot to do with the stock trading at 33 cents. Huh? Yes. We started talking years ago on this show about China's ghost cities. Fully built, fully functional, just no people. 60 Minutes did a segment a few years back. If you missed it, Google China's ghost cities, 60 Minutes. I really encourage you to watch this 60 Minutes piece. It is bone-chilling to look at. We said back then, eventually you got to pay the ban. Now, years later, the risk has been spread around the world, just like our mortgage-backed securities in 2008. We're all going to pay for this. Then, just when everyone gives up and clocks out, the market will come roaring back. Look at 1929 or 2000 or 2008. Eventually, it always comes back. However, this time, it's China. So it's not just big, it's really, really big. And there is no vaccine for this contagion. Or the other one, so I hear. Okay, let me see if I got a Logic 247 recap going on here. Valerie, did you post a recap? Let me see what I've got. To Tuesday at 11:10 a.m. I got it. Okay. Sorry about that. I just didn't see it. So let me put it in the right channel. In my channel. Okay. Okay, I don't think this is the actual, because I posted a number of alerts just before the show started. So I don't think this encompasses everything. If you do have one handy, Valerie, you can send it over to me. If you don't have it ready, that's okay. We can post it later. As of 11:10 a.m. this morning, we had a total of 28 alerts issued since Sunday night at 6 p.m. Eastern. Now, again, the Logic 247 alerts and the Concierge Trade alerts. This is where the bush pilot is showing you the area where you're most likely to find whatever it is you're hunting for, okay? And when you get there, that's where you use the rules of engagement that you learn in the live training room. So out of the 28 alerts, one never triggered, still waiting on one. 26 actionable alerts of which, as of 11:10 a.m., nothing had been stopped out. That's not typical. On a typical week, 20% of all logic alerts and concierge alerts do get stopped out, based on not risking more than $300 per contract per trade, less when possible, using market structure and a very simple 3-step process that we teach all of our traders. Last week, which was week 163, we had a total of 69 alerts issued. 14 never triggered. We had 55 actionable alerts, of which 9 or 16% would have been stopped out based on not risking more than that $300 risk profile that we just discussed. Now, the logic alerts are based on current price action, and they come out around the clock, 24/7, whenever opportunity presents itself. Along with the logic alerts, we also still have our original alert service, the concierge trade alerts, and the format for those is a little bit different, but the two work together hand in hand. Last night I posted them a little bit later than normal. Typically they come out shortly after the Globex Open. After the big day yesterday, I assumed the opening would be a little quiet last night, and so it was 8:25 p.m. Eastern when I got these posted. You'll notice that for each alert or each market, there's 2 numbers. Once this static report is posted, now let me explain this. These numbers, once posted, are good for the entire session. Once an alert triggers, whether it's a logic alert or a concierge alert, once an alert triggers, there's a greater probability of it triggering multiple times than not triggering multiple times. So again, once an alert triggers, there's a greater probability of it triggering again than not triggering again. Often here on the show, in fact, we had quite a few last week where we saw 4, 5, 6, 7 triggers off one alert. Really not unusual. It's been happening for the last 164 weeks. The way you handle the CTAs is you put a line in the sand, in this case at 43.75. Put a line in the sand at 43.33. Once this is posted, if price starts trending up towards 43.75, that's bullish. So we'll look for opportunities to buy the market based on our strategy. If price starts trending down towards 43.33, that's bearish. We'll look for opportunities to sell the market using our methodology, our strategy, our indicators, everything that you learn in the live training room. So if you want a screenshot, you can grab it, and we'll go to the 30-minute charts here. Resistance on this chart. Now I'm going to pull these reverse fibs off. But you know what? I think I'm going to leave them on for right now.
Okay.
Let's do that. I'm just going to leave them on for right now. Overhead, the high of the session, of course. Got the 38% reverse fib. That's potential resistance in the high of the session. And then you've got the step line in red and falling at the 50% reverse fib. Then you've got the BBC right at the 62% reverse fib. So as you can see, buyers have a lot of work cut out for them. They've got to overcome an awful lot of obstacles. 1, 2. There's 3 in that one spot. There's 2 in that spot. Not that it can't be done, but we're going to find out if this has been a dead cat bounce or not. We'll find that out today, tomorrow, Thursday, however the market unfolds. Now, while our methodology and strategy allows us to know what the next high probability move is in every market, in every time frame, we don't know what's going to happen next. Now, I know that most of the websites you go to, most of the email, emails you get are folks in the trading industry trying to convince you that in fact they do know what's going to happen next. But I got to tell you, they don't. It's not how God created this universe. When God created Adam, he did not give Adam the ability to change the past or know the future. Those two things are inextricably linked for eternity. And that's a very long time. Okay, I got your recap there, Valerie, that you just sent, I think. Yeah, okay, thank you very much. We'll look at that again, guys, as we when we get ready to wrap things up. Let me just switch this. Okay, all right. So we know where the hard work is overhead. I've outlined all the areas of resistance. Now, where's support? Well, support is first at this 24, and then the low of the session, and after the low of the session, you see this low and this low, right? Once we take out the low of the session, if that's how the market flows, then we've got a nice window of opportunity that takes us down to yesterday's window of opportunity, the one that got filled. Okay, so if we take out the low of the session, then we'll say 43.30 down to 43.10. So 20-point window of opportunity. And then I believe this was a 10-point window. Then we have a 30-point window. Then we have a 20-point window. Okay, and I'll post, or you can grab a screenshot. Just grab a screenshot. But after the show, I'll post a copy of this chart in the discussion group. Okay. We know where resistance is. We know where support is. Those CTA numbers that I just showed you. Let's take a walk through the charts. Okay. Now, the vertical line you see on the chart separates today, Tuesday, from yesterday, Monday. And so the long CTA last night for the S&P was 43.75. Price behaves at a CTA very much like it behaves around a weekly trading zone. And only three things can happen at a weekly trading zone. The most likely is consolidation. The second is rejection. The third and least likely, but it happens a lot lately, the slice. Okay. So on the first move up, okay, here's where the market opened. We opened above the BBC, so we know we're looking for trades on the long side. Okay. When price is below the BBC, the green line, bull bear cross. See how this is bearish, below the BBC. We get above the BBC, now it's bullish. We're looking for long trades. Okay. So on the first move up to the trigger, price got rejected. It was sent back down to the weekly trading zone. This first move up last night to the weekly trading zone, 43.66/67, price got rejected. Only three things happen at a zone. Consolidation, most likely. Rejection, second most likely. And then the least likely is the slice. And when I see a good clean example of that, I'll show you. This is not a good one because price already consolidated ahead of it. But you can see rejection there, and you can see rejection there. That's the second most likely thing to happen. The most likely is just this, consolidation, consolidation, consolidation. Now, when price rises to a weekly zone, we expect that to be good resistance until proven otherwise. And it was. It sent price back to blue and climbing, back to the step line. When price drops to those, we expect those to be good support. And they were. They sent price back to the weekly trading zone, where we consolidated, then made a run at the trigger, and got rejected. when price drops to a weekly trading zone, just like when we're moving up, we expect resistance. When we're coming down, we expect support. And when we move up, we expect resistance. And that's what we got in each case. Now we trigger 43.75. The target is 43.88. That's 13 S&P points at $50 a point from the published entry to the published target. On a long alert, logic or concierge, the final trade to target is always the weekly zone above. On a short trade, logic or concierge, the final trade to target is always the weekly trading zone below. Above on a long, below on a short. Okay? So from the published entry to the published target, 75 to 88, 13 points, $50 a point, $650 per contract traded. If you've earned the right to trade 10 contracts, well, you could do the math, that's $6,500. The last thing in the world you want to do is get a passport, become a family member, and start trading live, period. It doesn't matter how long you've been at this. If you become a passport holder, it's because you want to learn our methodology and our strategy. Maybe you want to get your hands on the weekly trading zones because you see how effective they can be. That's great, but you got to learn how to use them. You've got to learn how to put them in context, okay? So when you start showing up for class every day in the live training room, you got your indicators indicating, you're trading along with Michael and Valerie in the room in your simulator until you qualify to go live. Okay? How does that happen? Well, as a passport holder, you get the 2420 blueprint. Now, the blueprint is designed to help you go from 1 to 20 contracts over a period of 24 months. Once you put together 10 consecutive days in a row in the simulator where you reach your goal in 10 trades or less, that's when the blueprint will give you the green light to go live with one contract. Now you have a new goal because you're trading real money. The goal is to increase your account balance by $2,000. Once you do that, the blueprint will give you the green light to add a second contract. That's an important thing because your first contract, that's underwritten or funded with your startup capital. But beginning with contract number 2 and every contract after that, it's funded with profit you earned in the market. That's a big deal. The blueprint will notify you when it's time to add contract number 2, number 3, number 4, number 5. You only add one at a time when it's time, and you only add additional contracts with profit you earned in the market. Okay? So again, this is a $650 per contract move from the published entry to the published target. 2 contracts, if you've earned the right to trade 2 contracts, it's a $1,300 move. Again, simple math, you can do it. Now, when price, which flows the same on a monthly chart as it does a 1-minute chart, from support to resistance, back to support, back to resistance, it's a never-ending cycle. When price reaches an area that it cannot overcome, that becomes resistance. When the market finds resistance, it's going to turn around and go look for support. It's the only 2 things it knows how to do. And so, price comes back to the BBC. The pullback holds more often than it doesn't. Doesn't matter which direction we're moving. Leg, retrace, leg. The pullback holds more often than it doesn't. But eventually, a pullback won't hold because that's what keeps the markets fluid and moving and exciting and filled with opportunity. Okay? And so here we close below the BBC. So we go from thinking long to thinking short. and price takes us right down to a weekly trading zone where we find, you guessed it, support. That support sent us almost all the way back up to that trading zone overhead. Now, this is a big candle. It's the 9:30 a.m. Wall Street opening candle, typically the largest candle of the day. We opened here. Yeah, we opened here. We ran up, we ran down, and then we closed just below where we opened. So that gave us a little red body. All right. So now price drops. Why did it stop there? I'll show you. A bullish cross that leads to an extended move. When price revisits that area for the first time, it will almost always act as good support. It's a perfect example. Price came down, it did spike that area. Okay, we've got some good volatility going on, so much so that last night we had 100% margins on the overnight session. Thankfully today, we did go back to, they gave us back the day trading margins today. What will happen tonight remains to be seen. They'll base it on, what kind of volatility we have throughout the session. Okay, so the market comes down, finds the support created by the bullish cross. That sends price back up looking for resistance. Just like resistance sends the market looking for support, support sends the market looking for resistance. Now, when price pulls up to a weekly zone, we expect it to be resistance. When price pulls up to the BBC, we expect it to be resistance. So we've got resistance times 2. Yes, we did spike it. We did go up and touch the trigger. But you would never take that long trade because you've got to overcome the weight of this. That was just like an exploratory mission where the little prairie dog stuck his head up out of the hole, looked around and said, no way, and then ducked back down looking for a better place to pop out later. Okay, so price now is below the weekly zone, below the BBC, sitting on top of the step line and red and falling. When red and falling gets directly below price, it can actually become support, exactly like it did right here. So what needs to happen if the market is going to continue lower, price has to overcome this support created right here. Then we have a window of opportunity that would take us right down to this area. And then if we get through this area, get below these lows, then the lowest weekly zone this week is way down at 42.63. So we would have a huge window of opportunity. Just being very conservative. Basically 43.30 to 43.15. It's 15 points, $50 a point. That's the potential here. But again, before that can happen, sellers have to show that they're committed, more committed than buyers. They take us through red and falling support at this point because it's directly below price, and window and potential support. Need to overcome that support, including these lows, and then there it is. There has been no trigger yet on the short CTA for the S&P from last night, although we had logic alerts and all along the way. Usually the logic alerts will walk you right up to the doorstep of a CTA, And then if the CTA triggers, then there'll be logic alerts after that, because the logic alerts are based on current price action. These CTAs are based on historic price action. The two work hand in hand. Okay, so on the Dow, here's the open last night. There's a bullish cross. What do we know about a bullish cross? There it is again. Okay, so we're above the BBC. We anticipate higher prices based on that. And so off we go up to the CTA trigger at 340.20. We trigger, put in a swing high, 34.086. So call it 60 points, $5 a point, $300 per contract traded. Then price got back below the trigger, triggered again. This is what I mean when I say once an alert triggers, there's a greater probability of it triggering again and again and maybe even again than not. Okay, remember, as we were in our little bush plane flying low over all those trees, this area was circled on the map. This is where you find your game. Okay, so now I've got to put you down over here, so we don't want to spook the animals, right? Just follow the trail, and when you get to this area, that's where you find what you're looking for. Okay, all right. So from the published entry to the published target, 115 points, a little over $500 per contract traded. We have one trigger. We actually had two triggers. This would be the third trigger. And then things change. Okay, not all triggers are created equal. See, over here we had blue and climbing, right? That's bullish. We anticipate higher prices. But once red and falling enters the picture, that is resistance. And so we don't want to go long into red and falling. Even though this candle did spike way up there and it could have been profitable, that's not the program. Going long here would be like getting into your car in the garage, cranking it up, and instead of putting it in reverse, putting it in drive and stomping on the gas. Boy, that won't end well, right? Huh? And ultimately, this didn't end well. Resistance sent the market looking for support, and support sent the market looking for resistance, which it found at the BBC. You got a leg and a retracement. Remember, the pullback holds more often than it doesn't. We have the same situation here that we had on the ES. Price needs to get below red and falling, because right now it's directly below price, not alongside it, but directly below it. Over here, see how beautifully price climbs the back of blue and climbing? But once blue and climbing, in this case, became red and falling, once it gets, now on the way down, see how price beautifully, just slid right down with red and falling. But now, price has walked sideways, price has bounced, red and falling. If this candle can close back above the trigger, this red and falling is most likely going to become blue and climbing, like it did right down here. See? And we know that's support. So we're just simply looking ahead, realizing that if red and falling is on its way to becoming blue and climbing, this may act as support, just like it's doing right now. If price can overcome that support, if sellers are more committed than buyers, then we'll have a nice window of opportunity right here. Potentially your goal for the day. And just like the S&P, the short CTA has not triggered yet on the Dow. Moving on to the Russell. Okay, long CTA last night on the Russell. $21.88. Now we got rejected on this first one. Okay. What was the swing high of this candle? Come on. 2188.9. So not quite 1 point. Russell pays $50 a point. Now here's the thing. As I said earlier, okay, this is the area where your trade is, okay? But as you approach that trigger, you've got to use your rules of engagement. So as you look at your smaller time frame, you've got to see, do you have a valid trade setup the way Michael and Valerie teach you in the live training room each morning to take advantage of this opportunity, okay? We got blue and climbing all the way up, so that's perfect. All right, so we trigger again. This will be the second time, and we run up to 2190.6. So that's 2.5 points at $50 a point. And then we get back below the trigger. This time we run up to 2194. So from 88 to 94, that's 6 points at $50 a point, $300 per contract traded. And then what does price do? Price gets back below the trigger again. And this time it makes the run all the way to the target. From the published entry to the published target. From 2188 to 2200. That's 12 Russell points at $50 a point. That's $600 per contract traded. Now, I blundered my way through a hunting analogy. Let me throw a sporting analogy at you. Let's go football. We see this often, okay? The first move up to the CTA isn't the full-on trigger. At the beginning of a football game, or whenever it's time to kick off, I think that's what they call it. It's either dribbling or kicking off. No, I'm kidding. What does the kicker, I think that's his name, what does the kicker do? Everybody's all lined up. You know, the fans are in the stands on the edge of their seat. What does that kicker do? He often walks right up to the ball. Stands right, looking straight down at it. He looks to the left, he looks to the right, and then he backs up, and then he comes at it full on. Boom, 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 boom. So another twisted analogy from the twisted mind of Mr. D. Okay, so how many triggers do we get? One. It's really a rejection, but it went over the line. 2, 3, 4. 4 triggers, 1 alert. 3 of those gave you the opportunity to get your goal for the day and then some, from the published entry to the published target. Each ensuing trigger typically will require less risk, a smaller stop loss, and greater profit potential. There's a high, a higher high, a higher high, and then a higher high. This is a beautiful example. This is one you might want to just print out and hang on to. Okay, so price reaches resistance. It can go no higher. It almost hit the next zone overhead. Okay. That was it. That's as far as we could go. And can we connect that swing high to that swing high? You bet we can. Okay. So does that mean we're expecting there to be resistance when price gets there? Yes, it does. That's exactly what it means. We expect it to be resistance until proven otherwise. Okay. Now the swing high was Just tell me. 2208.8, so 2209, right? That was the high of this candle. So there was just 2 points between a break of that and the zone. So I wouldn't even worry about it. I would leave that alone. Okay. Now, price finds resistance it can't overcome. Bound to here, bound to here. This is where this bull move changes. Price starts to drop. We trade through the BBC. We've got red and falling overhead. Here comes our bearish cross, right? Okay. Now this bearish cross led to a pretty nice extended move. When price rallied back up, where did it find resistance? A bearish cross that leads to an extended move. When revisited the first time, will most likely be good resistance. That's exactly what happened in this case. When price found support down here around 2162, buyers came in, drove us up to the BBC, which we expect to be good. We expect the BBC to be good resistance. See, this is the long trigger, okay? So these were long trades here, but we've got red and falling. The BBC is right at the trigger, and you know you got potential resistance right there. I would leave that alone, okay? You just had a trigger on the short side, 2167, and that took us down to 2163. 4 points, $50 a point, $200 per contract traded. All right, that's the Russell. On the NQ, market opened here last night, bullish cross, and there it is. Bullish cross becomes support on the first trip down. Okay. Now it doesn't happen every time, but it happens more often than it doesn't. Okay, so we come up, and just like the last market we looked at, we went just like a couple ticks over the line. Okay, so you got to be looking at your smaller time frame, your rules of engagement you learn in the live training room. You know, do I have something here? Okay, we can see that basically went nowhere. So then we get back below the trigger. Off we go again. This time we make it up to come on 15089. So that's 29. Let's call it 30 points at $20 a point, $600 per contract traded. Okay, from that line, from the published entry to that swing high. Price then gets back below the trigger, takes off again, and it makes it to the published target at 15,125. That's about 60 points at $20 a point. That's $1,200 per contract traded. And then when price can go no higher, it goes looking for support, which it found here. That sent it up to resistance at the BBC and the weekly trading zone. See this spike, we almost touched the zone. Zones are an area just like fibs, okay? So we expect resistance when price rallies up to a zone, sends price back down below the BBC, below the step line, below red and falling, right back into this area of support where we are printing a little tiny green candle so far. We just got a brand new candle 1 minute ago. Okay. All right. So we've covered all the indices: S&P, Dow, Russell, and Q. Here's crude oil. Price got rejected right at the trigger. It's not magic. It's math. Plain and simple. And market structure, which is math. Okay, so we did tiptoe over the line here, but obviously price was rejected, same way it gets rejected at a weekly trading zone. We opened here at a weekly zone. We went from zone to zone. Some traders like to do that. They like to just trade zone to zone. From 70.45 to 71.15. What is that? $600 per contract traded. And then from zone back down to the zone. Okay. We finally trade through that zone. Our trigger on the short side is at 70.05. Okay. And then we put in a swing low at, we'll call it 69.40. So that's $650 per contract traded. Right there. Possible we're coming down to trigger again, but be careful, because if we don't trigger during this candle or the next candle, this is probably going to become blue and climbing, and then you won't want to go short there. Okay. All right. Go. The short trigger is way down at 1741. The long trigger, 1778. And like we're just now getting our second trigger. First trigger took us up to please. We're almost done. Do it. 1782.8. So that's $480 per contract traded. And we just triggered again. We still got blue and climbing, so you can still take this one. Just know that because blue and climbing is directly above price, that you might end up, if you triggered in at 78, you might need to take profit at about 1780 and change. Okay. Last but not least, silver. The short CTA never triggered, and I don't think the long one did either. $22.78 never triggered. And the short side. Wait a minute, maybe the short side did. Hang on. Was it 22.25? Yeah. Okay. So the market opened last night. I didn't get them out until 8:15, so that's going to be 2015. So the 2000 candle is about right here. Looks like the low of that candle. Yeah, maybe there was a nickel there. Okay, not a lot to get excited about. And then price rallies up. It goes from zone to zone, consolidate, pull back to the BBC, which we expect to be good support, and it was. That sent us back up to the zone, which we expect to be resistance, and it was. The most likely thing that can happen, consolidation, is happening right now, and then that long trigger's overhead at 22.78. So there you have it. Around the world. Okay. Remember what this candle looked like at the beginning of the show. It was a much larger green candle. Still had a lot of wick on the upside, but the body was fuller. And now it's smaller. Okay? If you didn't grab that screenshot before, I want you to do it now. You know what? I'll just take this opportunity to grab a screenshot and I'll post it in the discussion group. And if you're not a part of the discussion group, you can be a part of the free trial discussion group, even if you're not ready to become a member yet. If you just want to hang out with some of our traders, see how they're doing. We actually allow our traders to talk to civilians, outsiders, because we're transparent about everything we do, and nothing to hide. So, in fact, we're pretty proud of the crew that God has put together at CFRN. You'll meet some really nice people. People that can be a blessing to you and your quest of learning how to trade. So remember, if we take out the low of today, we got a 20-point window of opportunity, 10-point window, 30 points, and another 20. Let's go to our good word for the day. Oh, if you want to become a passport holder, you want to become a member of the family, you want to have access to a live, living, breathing teacher. One who puts on and takes off trades live in real time while you trade along with him and answers your questions every time you have one. If you think that would be a great environment to learn in, while learning our methodology, our strategy, owning our indicators for life, having unlimited access to one-on-one mentoring, the around-the-clock alerts, the concierge alerts, all that, everything we do, everything we've ever done, and anything we do in the future. And we do have stuff on the horizon. If you want that for your life, for your trading business, it's very, very simple. You can become a passport holder today. Just go to eminifuturestrading.com. If you have questions, call Valerie at 949-42-EMINI or send an email to support@cfrn.net. All right, good word for the day. Yesterday, we talked about making criticism work for you. Today, we're going to talk about marriage. I think most of the folks in this audience are probably married, or have been at some point in your life. Matthew 19:5. And he said, this explains why a man leaves his father and mother and is joined to his wife, and the two are united into one. Now, if you're old enough, you'll remember a lady by the name of Dr. Joyce Brothers. She was very controversial in her time back in the 70s. Dr. Joyce Brothers once joked, "My husband and I have never considered divorce. Sometimes murder, but never divorce." You can see why she was controversial. Getting married is easy. Living together successfully is hard. So, how do you do it? By identifying issues that must be resolved, working on them, and learning to live with the rest. Snoring, endless hours of watching TV, not communicating, dirty socks on the floor, unmade beds. Your partner's habits can drive you crazy. Until so many years go by that you don't even see them anymore. And since Jesus said in Matthew 19:6, "Let no one split apart what God has joined together," how should you handle these conflicts when they arise? Number one, attack the problem instead of each other. Often that's where we make a mistake. We make it about the person and not the problem. Number two, keep your voice low, stay calm, and your partner is actually more likely to pay attention. In fact, an old sales trick, if you've ever worked in sales, so you're trying to close a deal, instead of raising your voice like the evangelical preacher, you actually lower your voice. Because if the prospect is truly interested, as you lower your voice, he or she is going to lean in to make sure they hear exactly what you say. And that's your signal you're about to write up a contract. Number 3, choose the best time to address the issue. Not when the kids are hungry or you're both tired. I admit that's one I've always struggled with. If I bring it up in the morning, then I ruin her day. If I bring it up at night, then I ruin her sleep. So, just think about, when is the best time? And when you figure it out, let me know. I'd love to know. Rachel, I'm not sure how long ago you asked this question. Oh, it looks like not too long ago. Is it recommended to cross-reference to daily chart while trading the Vortex range? Yes, we're very much believers in multiple time frames. However, the daily chart doesn't change much because every candle represents one day. So you look at it in the morning, and if you're painting a green candle on the daily chart, and if on your smaller time frame price continues to rise, then you know that daily candle is still green. Okay? Thursday night in the workshop, ask that question again, and I'll give you some real good examples, okay? I'll show you how to do that. Okay, so we're going to attack the problem instead of each other. We're going to keep our voice low. We're going to stay calm. We're going to choose the best time to address the issue. And number 4, we're going to remember that men and women see things differently. So when your spouse expresses their point of view, don't sigh and roll your eyes. That's what marriage therapists refer to as active listening. It calls for affirming your spouse through paraphrasing, validation, and positive feedback. Instead of saying, "That's a load of crap," or you could say, "Well, I see how that might make you feel that way." You've said the same thing, but one's a whole lot nicer than the other. One edifies, one builds up. One shows that you're willing to work towards a solution. Number 5, there will be times when you both have to compromise, or maybe even agree to disagree. Number 6, choose your words carefully. Ephesians 4:29 says, "Do not let any unwholesome talk come out of your mouth, but only what is helpful for building others up." Or as Granny Reeves used to say, if you ain't got something good to say, shut up. 1 Thessalonians 5:11 says, "Encourage one another." Ephesians 4:32 says, "Forgive one another." That's a big one. The Bible. If you had to sum it up in one word, what would that one word be? Forgiveness. James 5:16, pray for each other. Hebrews 10:24, spur one another on towards love and good deeds. Galatians 6:2, carry each other's burdens. In Romans 12:10, give preference to one another. When I used to do marriage counseling, I would talk to the couple together and I would talk to them individually. But I would tell each of them when I was talking to them separately. I would say, "Bill," if his name was Bill, I would say, "Bill, if you'll do this one thing, your marriage will survive." What's that? What's that? If you will make her wants, needs, and desires more important than your own, your marriage will survive. It will be fruitful and productive. And then when I would talk to Mary, if her name was Mary, I'd say, "Mary, if you want your marriage to stand the test of time and to be a good thing, not something you just tolerate, I want you to learn how to put Bill's wants, needs, and desires ahead of your own. Do you think you can do that? Well, I can try. I never thought of that, but yeah, exactly, you never thought of that. So see, if you can get two couples, both individually apart from each other, committing that they're willing to try to put that other person's wants, needs, and desires ahead of their own in everything, what do you end up with? Those couples that you see that are in their later years that are still giggly and hugging each other and holding hands while they walk through the park and smiling and remembering birthdays and anniversaries and just, living the good life. That's what you get. And that's our good word for the day. Thanks so much for tuning in. Whoever you are, wherever you are, may God continue to richly bless you with His mercy and with His grace. And I'll see you at the bell.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading E-mini futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.